Good afternoon, Southern California. I'm John Baldwin with John Hart Real Estate, and today is Valentine's Day, February 14th, 2022. What I want to talk to you about today is something I talk about a lot, which is interest rates. But there's a reason, today's going to be a little different. Is that rates have seriously jumped. They've blown past what all the predictions have said, and that's why we need to kind of get into it a little bit. So here we are with an article from housingwire.com, came out on Friday. And mortgage rates blow past industry predictions. Now, remember, I did the Barry Habib video. His forecast for 2022 was that he thought we would see interest rates about 3.7, 3.75 by mid-year. So, that's June or July. Here we are in the second week of February, and we've blown past 4% already. So you can see some mortgage rate indices top 4% on Thursday, blowing past predictions that rates might reach those levels by the end of 2022. Now, if we go back to the Barry Habib video, he thought we'd hit about 3.7, 3.75 by mid-year, and then he thought there'd be a pullback as the economy kind of struggled a little bit. And he's been very good over the last several years, and he's definitely respected in the industry. So Freddie Mac seeing 3.69% for 30-year fixed-rate mortgages. The Mortgage Bankers Association was a little higher at 3.83. But if we look at the secondary market with this Blacklight data, 30-year conforming mortgages were at 4.071 Friday morning, and FHA 30-year rate 4.122. Now, FHA is always going to be a little higher. They build in mortgage insurance. They also build in a little bit to pay back the FHA program. So easier qualifying, much lower down payments, 3.5% down payment. So it lets you get into a house with a significantly smaller down payment so that you can get in and start building that equity. So it is a good option. You just have to pay a little bit of a premium on rate to get into that program. So here we are. Joel Can is the Associate VP of Economic and Industry Forecasting at the Mortgage Bankers Association. And this is, I want to not get into, if conditions stay in the current state, we'll certainly see higher rates. All right, yeah. If the economy keeps chugging along in this same way, but what the second half of what he's saying here is, if something abroad rocks the boat, such as an armed conflict with Russia and Ukraine, an emerging COVID variant, or a sudden change in certain commodity prices. And I think that last piece there is what we really need to focus on, because they came out with the inflation numbers last week. And inflation was at 7.5%, which is the highest we've seen in something like 40 years. And I think that is a bigger factor to what's going on right now than Russia-Ukraine conflict. I don't see how that's really going to impact mortgage rates in Southern California. But it may impact some supply chain issues, but I don't think we do a lot of import-export from the border between Ukraine and Russia. So maybe I'm just overthinking that there. But rates have jumped up. What that usually means is that our rate of appreciation is going to slow down. Last year, we averaged across the country about 15% appreciation. Barry Habib was forecasting like 5 to 9% for 2022. The video I did last week talking about, other predictions, what they think is going to happen, like the Mortgage Bankers Association or Fannie Mae, Freddie Mac, they were thinking more in the 3 to 5 or 3 to 7% range. So now, based on this higher interest rate, I'm gonna revise my mental math down to that maybe 5 to 7% this year. Now we'll see. Maybe Barry Habib's gonna be right on the nose in that 5 to 9 range. I just think with interest rates going up, it's gonna slow down that rate of appreciation a little bit, which is both good and bad. It helps buyers get in at a slightly lower sales price, but that also means that their monthly mortgage payments. I'm going to do a video doing the analysis between a lower interest rate and a higher interest rate based on slightly different purchase prices. Higher purchase price with a lower interest rate can actually be a cheaper monthly payment than a lower purchase price with a higher interest rate. So I'll put that together this week and see how we can work on that. But this is an opportunity, people. If you're thinking of selling, right now we're going to be able to get out ahead of these rate increases that we're seeing. Because if we're going to see an even, let's bump up what Barry Habib was thinking. If he was thinking 3.75 by mid-year, maybe we're talking more, 4.25, 4.5 by mid-year. So now is the time to jump. So we don't know what's going to happen. Mortgage rates fluctuate a little bit. But nobody anticipated 4% by the middle of February. So this is something to keep watching. But I keep doing these analyses where I look at the months of inventory. And months of inventory, there's a reason my broker calls it the magic metric. We're at half a month of inventory in many cities across Southern California, like Claremont, where my office was for 9.5 years. Did market analysis for a client out there, and Claremont has maybe 2 weeks of inventory. Did analysis for another client in Burbank, same thing, maybe 2 weeks of inventory. Then you'd look at the whole LA metro area, and you have maybe 1 month of inventory. So we'll see what happens with slightly higher interest rates, whether that gets some people off the sidelines. Because I'm still, if you can lock in an interest rate under 4% for 30 years, that's going to save you more through time than a $20, $30, $40,000 difference in sales price. So I know that sounds a little counterintuitive, but let me get you in touch with one of my lenders. Give me a call, 213-973-3777, and we can talk about how interest rates will impact you at different prices. But I said I'll do a video also this week, and then but we need to talk to you about what is your strategy. Are you in your dream house? Let's do a seller consult, because if you're not in your dream house, this may be the opportunity to really maximize your sale price, because we have so little on the market, and then get into a new home, your dream home, at a good interest rate under 4%. So give me a call, 213-973-3777, and let's get your house sold.